Hey there, welcome to Capital Compass. If you've ever wondered how some people build wealth by simply letting their money work for them, or you're curious about how to get started in investing, you're in the perfect place. Today, we're diving into the ultimate beginner's guide to investing. Whether you're new to this or just looking to sharpen your skills, we'll explore key steps to get started, look at some beginner-friendly assets, and even break down a real-life example of how investing just $100 could have made you a millionaire. Intrigued? Let's get started. Alright, let's start with a powerful truth. You don't need to be rich to invest, but you do need to invest to build wealth. Investing is like planting a tree. The sooner you plant it, the more time it has to grow into something massive. But what if you've never invested before and don't know where to start? No worries. We'll walk through it together. The first thing to understand is your why. Are you saving for retirement? A dream vacation? Building an emergency fund? Knowing your goal helps you decide how much to invest and what to invest in. And here's some good news. Thanks to modern tools and platforms, you can start investing with as little as $5 or $10. The barriers are lower than ever. Now, let's talk about your options. As a beginner, you'll likely want to focus on stocks and ETFs. But what's the difference? Stocks are individual shares of a company. When you buy a stock, you own a small piece of that company. ETFs, on the other hand, are collections of stocks bundled together, allowing you to invest in multiple companies at once. Think of stocks as choosing your favorite movie star, while ETFs are like buying a ticket to a blockbuster ensemble cast. Let's make this real with a famous example, Amazon. Imagine it's 1997. Amazon is a small company focused on selling books online, and its stock price is $1.50, adjusted for splits. You decide to invest just $100 in Amazon. Fast forward to today, those $100 worth of shares would now be worth over $1 million. That's right. A simple investment in a young company with massive growth potential turned into a life-changing fortune. Why? Because Amazon didn't just grow. It revolutionized the retail and tech industries, driving exponential growth for its investors. Now, does this mean you'll always hit the jackpot with individual stocks? Not necessarily. Investing in individual stocks can be risky because no one can perfectly predict which company will become the next Amazon. That's where ETFs come in. Take the Vanguard S&P 500 ETF, ticker VO, as an example. This ETF tracks the S&P 500, which is an index of the 500 largest companies in the U.S., including giants like Apple, Microsoft, and Google. By investing in VO, you're essentially buying a piece of the entire U.S. economy. Over the past 30 years, the S&P 500 has delivered an average annual return of around 10%. This means that even if you had invested $100 per month in VO since 1993, you'd have over $200,000 today, all without needing to pick individual stocks. That's the magic of compounding and diversification. Now, let's dive into why these investments work so well. Stocks like Amazon grow because they innovate, expand, and capture market share. But ETFs work differently. They grow because the overall market tends to rise over time. Sure, there are bumps along the way, think recessions, bear markets, or pandemics, but historically markets recover and reach new highs. That's why long-term investors who stay the course often come out ahead. But let's address the elephant in the room, risk. Investing always carries risk. Stocks can go down, and even ETFs can experience temporary dips. The key to managing risk as a beginner is diversification. By spreading your money across multiple stocks or ETFs, you reduce the impact of any single investment underperforming. So how do you start? Here's the step-by-step playbook. Open an investment account. Platforms like Robinhood, Fidelity, or Vanguard make it easy to start investing with just a few clicks. Choose your first investment. If you're feeling adventurous, pick a blue-chip stock like Apple, APL, or Microsoft, MSFT. These are well-established companies with strong track records. Prefer something simpler? Go with an ETF like VO or SPY. Invest consistently. Set up automatic contributions to your account, even if it's just $50 or $100 a month. This set it and forget it approach ensures you're always building wealth, no matter what the market is doing. Think long term. Remember, investing isn't a get-rich-quick scheme. It's about growing your money steadily over years, or even decades. Let's circle back to that Amazon example. It's inspiring, but here's the key takeaway. You don't need to find the next Amazon to succeed. Consistent investing in a diversified portfolio, like an S&P 500 ETF, can yield incredible results over time. The earlier you start, the more powerful compounding becomes. Before we wrap up, here's something to remember. Every big investor you've ever heard of, Warren Buffett, Peter Lynch, Cathie Wood, they all started small. The most important thing isn't picking the perfect stock or ETF. It's simply getting started. So, here's your challenge. Pick one stock or ETF that excites you, open an account, and invest a small amount this week. If you're not sure where to start, ETFs like VO or SPY are great beginner options. If you want to dabble in individual stocks, look at companies you believe in, ones whose products or services you use every day. If you found this video helpful, hit that like button. It really helps us reach more people like you. Don't forget to subscribe to Capital Compass and turn on notifications so you never miss an investing tip. And we'd love to hear from you in the comments. What's your favorite stock or ETF? Or maybe you have a success story of your own. Share it with us. Thanks for watching, and here's to your financial journey. Happy investing, and I'll see you in the next video.